Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by Agri. Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. We're glad you're here on today for our program. I'm going to talk about the biofuel industry and crop production in Ohio with Jacque Fatka from CoBank. And then we'll see how much of yield with this heat in the Midwest, like in Iowa, Minnesota, Nebraska, Illinois. Well, I am asking about that with Tyler Shau from agmarkets.net. You've been listening to Back Roads of Illinois. I'm going to talk about the biofuel industry and crop production in Ohio. Jacque Fatka from CoBank. Hey, Jacque, how are you?
Good morning. It's great to be back with you.
Glad to have you again. So, Jacque, let's discuss about the grains and biofuel. What is your thoughts on it with soybeans oil in the markets?
So, we finally have some more insight as we look forward to what our future soybean meal and most definitely the soybean oil demand is because of the recently announced renewable volume obligations from the Environmental Protection Agency. So the fact that EPA did put out a proposal a couple months ago now, and they're going to be finalizing that here in the next several months. The comment period will close next week, actually. There was a hearing a couple weeks ago. Big news out of that for soybean oil because it could definitely add significantly more demand for soybean oil, mostly because of the fact that it will not give as many RINs, which is the renewable identification number, for any imported feedstocks. So with our renewable diesel production, we can use a lot of different feedstocks there. One of them is soybean oil, but other feedstocks that can be used include corn oil, which is a byproduct of the ethanol industry. Those are both domestic, but then you look at some of our imported feedstocks, and that's when we have quite a bit of imported tallow, some imported used cooking oil. So we could see a shift in some of those other feedstocks away from those and back into more soybean oil or used cooking oil. When we look back at the last couple of years, last year, if you look at the overall pie of what was used in our renewable diesel and biodiesel feedstocks, soybean oil was only 35% of that pie in 2024. But in 2021, it was almost half. It was 49%. So maybe we will start to see additional soybean oil used because of that reduction in the RINs generated through those imported feedstocks or imported biofuels. And we could see as much as 3.8 billion pounds of extra soybean oil demand next year, and maybe as much as 1.9 billion pounds in extra demand in 2027. So we could really tilt that overall pie maybe as high as 78%. Now, it's the wild card of how much, but definitely a good build, good opportunity for the soybean market with maybe more soybean oil demand because of this outlook for biofuels.
Do you have any concerns about the beans oil change to the SRE in the future?
So the small refinery exemptions is, I think, what you're asking there about the SREs, and we are waiting to see what EPA will do with some of these small refinery exemptions. And the question is whether they will require additional, do they eliminate it or do they require additional larger facilities to absorb some of those smaller refinery exemptions? Looking back in previous years when the Trump administration did approve some of these SREs in 2017, it did create a little bit of shift. The market is, we're waiting to see what's going to happen and how this might impact demand. We do know that EPA is likely to make a decision on these SREs ahead of its final rule on the renewable volume obligation, which is supposed to go into effect by November 1st. So we'll get a little bit more clarity here. That is, one of the wild cards we're waiting to see. I've been calling it an X factor on how EPA treats these historical SREs and what they do, and how they allocate those potential exemptions on the overall demand for biofuels.
Of course, we will see the next couple months, right?
Yep, we should have that data here, maybe here in August or September, at the latest October, ahead of that November 1st deadline of when we're likely to see the final RVO mandate level.
Do you have any final thoughts about the RVO?
The renewable volume obligation is definitely great news for especially the soy industry. And the soy oil is really the biggest winner in those proposed RVOs. But as we mentioned before, the SREs really remain the X factor in whether those final levels will be realized. I think also too, we should know all of those pieces ahead of the final RVO. But overall, the industry is really glad to see that EPA did increase their overall bio-based mass diesel mandate level. They do believe that we're going to have an increase of being able to produce that. We were overproducing what the 2023 through 2025 levels were. However, we have a lot of uncertainty now. So we are still going to need to see some RIN values ratchet up a little bit yet here this year because we're so far behind our renewable diesel and biodiesel production with the shift away from the dollar tax credit that was previously there to this 45Z program really slowed down production to start the year for renewable diesel and biodiesel. And so we just don't have as much that's happened so far in 2025. So we're going to really need to pick up things as we head into 2026. I think we didn't talk about this, but on the biofuel space, a lot of good news coming out in some of these trade deals that the Trump administration has done here in the last couple of weeks that could boost ethanol exports. Ethanol, I've been saying, is really an easy trade win. And so even though the RVO establishes ethanol production mandates here in the U.S., at a pretty steady level. We're not seeing a lot of increased ethanol use here domestically. The industry continues to look outside of our borders to potentially increase exports. And so some of these trade negotiations are stating ethanol as an opportunity for these countries around the world to increase their imports of U.S. ethanol, which again is good for corn prices. It's good for the domestic ethanol industry to provide these additional markets outside of the U.S. for our product.
What do you recommend for farmers to put the RVO for their mind?
Well, the farmers don't really have much to do with the renewable volume obligation, the RVO, and that's established by EPA. But I do believe that these ethanol, the biofuel groups, which have a lot of farmer members, have done a really good job of advocating for the potential opportunities for the US industry to expand their production to meet these needs. And so you saw that too in the fact that the domestic feedstocks receive the 100% value for those renewable identification numbers generated with each gallon produced. And then the fact that the imported feedstocks are only getting 50%, I think, again, this is an opportunity that domestic producers, domestic farmers can help help meet these very ambitious goals to continue to provide a very strong demand for our U.S. energy needs with biofuels.
Of course, ethanol is better than just gasoline.
We are seeing, we're definitely over the 10% blend level for ethanol in the U.S. gasoline supply. We continue to see that slowly increase as well with higher blends of E85 as well as even E20 and E30 and sometimes even up to E15%. There's more and more local retail stations that are allowing E15. Several 8 states in the Midwest have that. There's also continued national legislation to try to allow for E15 use. And again, this is preferred by many in engines because of the octane that is included in ethanol. And so this is important for just the ability for engines to run well. Now, sometimes you don't want to have that ethanol in some small engines, but we've seen decades of research that shows the ability for E15 to be used safely in cars for the last several decades.
Thanks, Jacque.
Always so great talking with you. Thanks so much for the time today.
This we'll see how much of yield with this heat in the Midwest, like in Iowa, Minnesota, Nebraska, Illinois. Well, I am asking about that with Tyler Shau from agmarkets.net. Tyler, how are you?
I'm doing good, Caesar.
Summer.
I'm doing good. Summer was good. It's gone by awfully fast, but I guess it never seems to slow down. So we'll just deal with it. It's almost August.
I heard you. Tyler, what is your thoughts on this crop for this growing season? Could we discuss about this growing season with high temperatures?
As of right now, it sure feels like this is a large crop. You can debate all the specifics, and I try to just stay out of that. My approach to this conversation has always been if I talk to one of my producers right now and ask them what their yield is on their farm, most of them can't tell me what it's going to be. Or if I ask now and then I compare it to what it actually is when the combines roll, they're generally off, 15, 20 bushel per acre in a lot of cases, especially when you get a year like this with a lot of, I don't extreme weather, but some of the maps came out over the last 30 to 40 days. We've seen a lot of crop reporting districts with some of the wettest last 30 days we've seen in the last 130 some years. So specifically one in central Iowa, where I'm originally from. I was on the phone with one of my customers down there today, and they're in the third wettest year in the last 133 years in their reporting district. So when you get into these extremes, I feel like it makes it even more difficult to try to predict what yields are going to be. I think it's safe to say we can safely assume right now, if we were to harvest today, and if we could fast forward with conditions and they stay where they've been, you're probably looking at a record yield just given what we know. But a lot can change. There's a lot of time between now and harvest. I try not to deal too specifically with where the yields are. I mean, I think it's important to pay attention to. I get it. The trade is paying very close attention to it. But the price is going to do what the price is going to do. As far as the hot temperatures, it was hot. Yeah, it probably hurt yield or took the top end off. But I think in a lot of places you had some moisture to offset that. So now you got to start debating which is more important. is the hot temperatures and the hot overnight temperatures more detrimental to yield than the rain during the day? And I don't know that anyone knows the answer to that question. So you just got to pay attention to the market. The market's always on the right side of stuff because it's a collection of a whole lot of individuals. And right now they feel like the heat wasn't a big enough issue to create too much concern. And that's why I think we traded down a nickel today.
What is going to be the yield? What do you think in the Midwest without the condition, Tyler?
Well, I think right now we're gonna be in that, the trend line yields 181. That's a record by a couple bushel per acre. It's hard for me to get in that camp where it's much higher. I'm gonna go out and say in that trend line 181 to 182, somewhere in there. We had Mike Toohill on one of our meetings last Monday, and that was his thoughts. He's been walking cornfields. His estimate is 182. I'm going to say he's probably got a lot more experience and a lot more knowledge in that field. So I'm going to lean on him and go probably expect a 182 yield as of right now. But the caveat to that is that there's a lot of time left. A lot of things can change. Less things to change today than there was a month ago, though. I will say that you've had a really good uh, May, June, and July in a lot of places. And so, you got 3 months down, you've only got a couple months left. So I'm not looking for massive reductions in yield from here on out, but I think last year was a proof positive that we can see a reduction in yield. If you recall, when we were looking at the fall WASDE reports, they had them pegged at a 183-ish yield. And they pulled that back about 4 bushel the acre in the January report when they got some physical data in that said, hey, the crop wasn't there.
Of course, it's going to be cooler by Wednesday in central Illinois.
Say that again, please.
Hmm. How is the weather in South Dakota with the fundamentals on the wheat markets?
Weather for the most part's been pretty good. The one thing that would help this crop is if it would kind of dry out now. We're probably going to start getting into some quality issues. If the crop's ready to be harvested and it keeps raining, you start to run into some quality issues that kind of lead to some dockage on the price side when you go to sell it. Might not have that big of effect on yield now, but quality is more a concern. So it'll be interesting to see how our weather plays out. Current forecast is for it to stay relatively cool, maybe get a little bit of rain. Over the next week or two. So I know a lot of producers are kind of hoping that this is the time of the year where they hope maybe it kind of warms up and dries out so they get that crop off, get good quality, try to get some good protein, try to minimize discounts as they move forward.
Great to hear that. What is your thoughts with the fundamentals on the cattle markets for right now?
Fundamentals are still bullish. Got the cattle on feed report on Friday. Showed us lower cattle on feed. I think the lowest since 2017. Lowest placements we've seen since they started tracking that back in the 90s. So I mean, it just tells us. It doesn't really tell us anything new. It tells us what we already knew, and that's supply of feeder cattle is limited and looks to remain limited for the near future. So it's friendly to prices, should keep prices supported. We saw that today. We saw early on gap open up higher, and then as the day traded on, we went down. I don't know. I haven't had a chance to look to see if we filled some of those gaps. I think we did fill most of them, so no gaps on the charts anymore. But then late in the day had a push back higher. We actually closed lower than where we opened, but still higher on the day from where we closed last Friday. I wouldn't be surprised to see some higher prices moving forward, just with fat cattle cash being $10 to $15 above where the August board is, and August coming to a close here, going into first notice day, and then kind of getting into the delivery month and the month of August. I think August has probably got to do a little bit of work on the board. Feeder cattle seem strong. The index is 330. So, I mean, cash feeders are trading right where the futures are. A slight discount, but I think you'll see that hem up over the next few weeks. And yeah, fundamentals are strong. I don't see that changing. Demand seems strong. Not really seeing anybody back off from buying beef. So it's just the perfect storm where we have gotten the consumer used to food inflation. Everything they buy has gotten more expensive, and they're not batting an eye at $6 hamburger and $15 ribeyes.
We were seeing huge swing by today on the cattle markets. What could we have some concerns of the cattle markets with these prices?
Well, there's always concern. You get to these kinds of levels, you get to the fund position being massively long, especially in the feeder calf sector. I think you'd be foolish to not have some concerns. I've been saying for the last, seems like 3 or 4 years now, anytime I talk in the cattle markets, we know supply is an issue. We know that we're not rebuilding the herd at the pace that we have in previous years where we've seen this level of pricing. There's a lot of factors that go into that. Bottom line is this, it's usually something that is not related to the cattle market or directly related that ends up taking prices lower and hurts the bull market. So trying to predict that, I think, is maybe a fool's game. If you own cattle, if you're long the board somehow, you should be looking, you should be willing to give up a little bit and buy a put option or LRP or something that protects your position and puts a floor under it. But that by no means is me saying that prices are going lower. It's well supported. I think cost of gain is everything. And as we talked about with corn, doesn't look like corn supplies are going to be hard to find. Throwing the fact wheat's awfully cheap. You've got good grass in a lot of the country, which should equate to cheap hay. Cheap soybean, you name it, all you go down the gamut of what people might throw into a cattle ration. It's really easy to find cheap feed sources, and as long as the cost of gain stays low and supply cattle stays high and the consumer continues to buy beef, I don't think there's any reason to expect these prices to falter. Now you're going to see some volatility. We've seen that. We'll have a day where we're down $5 and all my cattle producers call panicking, wondering what's going on. And I'm like, it's the world we live in. Get used to it. We got $9 limits on feeders. I think $7 limits on fats. Prices are going to jockey around. You're going to see big swings. You get to these levels, people get real nervous about prices falling out. So you're going to have some jittery traders that put some stops in, and I wouldn't be surprised to see the markets jitter back and forth. But for the time being, on just a pure fundamental picture, what we know today, I see cattle being well supported here moving forward.
Yeah, it is pretty strong with the cattle markets than the grains markets, Tyler.
Mhm.
Do you have any final thoughts about the corn production from this year?
No, I don't have any reason as of right now to waver too far from that 182 mark. I've got some producers telling me they got some disease issues and they see some corn that doesn't look so good in the low standing areas, especially also on the bean side in that same predicament. But the bottom line, I think the crop has had ideal growing conditions in most of the country. And as a result, you've kind of got to be expecting a lot of production coming our way.
Thanks, Tyler.
You bet. Have a good week,
This is
Caesar.
Tyler Shau from agmarkets.net. I am Caesar Delgado. You have a great day.